So what's going on, everybody? It's BikerboyDee with Zamunda Profit Squad, and today's lesson will be on gaps. Now, I decided to do today's class on gaps because we have had some crazy, crazy, crazy gaps within the last week and a half, 2 weeks. And I think that it is very important to know what a gap is, how to play it, and what to look for and how to draw them. So that's what today's lesson is going to be on. Let's get into it now. So the chart I chose to go with for the lesson is NVIDIA. Now, most tickers last week have experienced gaps. NVIDIA has a very infamous gap that we will show a little later, but NVIDIA has a very, very infamous gap that a lot of people were able to profit off of. So first, let's talk about what a gap is. So a gap is a discontinuous space in a securities chart where its price either rises or falls from the previous day's close. That's very important. From the previous day's close with no trading in between, right? So if you ever had any clue about what a gap is, the first thing that could probably draw your attention is something like this. And don't mind this purple line. That's just my VWAP, which can help you identify gaps. Honestly, they help me identify them better, but VWAP has nothing to do with gaps. So I know somebody's probably going to ask, what is that purple line? VWAP has nothing to do with gaps. It's its own separate indicator, its own entity, but VWAP also can help you see gaps too. So this probably draws your attention. As you can see, we have a gap here. We have a candle. We have no trading in between. And let me even take the indicator off so you can see how it will look. So we have this candle. We have no trading in between it. And then we have this candle, right? That is your basic gap. That's what the normal trader would see. They would only see this as gap, but there are many other gaps out there. And I'm going to show you the way that I draw gaps, the way I was taught, and I think is a lot more beneficial than the standard practice of the way that people are taught gaps. Okay. So what is important about a gap is gaps are likely to be filled. So once you have a gap up, right? Once price gaps up, it is likely that at some point in time that gap could be filled. Now, there's a misconception that all gaps are filled, and that is not true. Gaps are likely to be filled, but they don't have to be filled. It's a very, very high chance, that something gaps up or gaps down, that it will be filled at some point in time, but it does not have to. There's nothing saying that it has to. Okay, so I want you to remember that. The reason a security can gap up or down in price is usually due to some type of news release, maybe an upgrade, downgrade, maybe a change in the economy. We have a positive outlook on further economics that could cause not only that ticker to gap up, but multiple tickers to gap up, the overall market to gap up. Earnings, you'll likely see gap ups, gap downs during earnings, dividend payouts, things like that. There's usually some type of news involved with gap ups. That is the textbook definition of why things gap up. I also believe things can gap up and gap down to create liquidity. And by that means to make people believe that we're going long, they create that liquidity to short it to a discounted price. Vice versa, they sell it off at a discounted price to buy it up. Now, there's nothing I found to really back that, but that is my hypothesis also why we have random gap ups, right? You'll see a ticker that gapped up that next day and there's no news behind it. There was no reason for it to gap other than it created liquidity. So that is my own conclusion on that. So first, You have something called partial gapping. And what a partial gap is when the opening price is lower or higher than the previous day's close, right? And I'm going to show you these things, but I want you to write that down. A partial gap is when the opening price is higher or lower than the previous day's close, but within the day's previous range. And we'll get into that, but that's what you need to know for partial gapping. And then next is a full gap. A full gap is when the open is outside the previous day's range completely. The next candle opens outside of the previous day's range completely. Now, if we know we're straters, so we're very familiar with a day's range. We know that the high is the top of the wick is the high of the day. That's the high range. The bottom wick or lower wick is the low of the day, which is the low range. So that is your range between the high and the low. If you have a gap up, a full gap, it completely passed throughout the previous day's range. Okay. Gonna leave that there for a second. Okay. So now I'm going to show you how to draw a gap. Okay. Now, some people, they draw their gaps. So this is a gap right here, right? That's pretty obvious. I'm sure everyone can see that. So most people draw their gaps from the high of this candle to the low of this wick, right? And you would think that makes sense, right? There's no candle within this range, right? But if we look at the definition of a if we look at the definition of a gap, it rises or falls from the previous day's close, right? That's very important. So if we're talking about the close, did price close up here at this wick? No, it did not. Price actually closed right here, right? So when you're looking at a chart after hours, right? If you look over here, it's going to say this price where it says close, or it'll say like market close right here. It's going to say this price. It's not going to say this price up here at the top of the wick. It's going to say this price, right? So when you open the next day, it's not going to say this price. It's going to say this price because this is where you open. So this is where you close. This is where you open. The wicks are just where it traded into this range. But these lines right here was your gap range. Okay. And we're going to get into that. So the way you draw a gap, this is what I want you to remember, and this is what I want you to write down. It's from the close to the open and then adjust it. Okay. Close, open, adjusted. That's what I want you to write down. Close, open, adjusted. Okay. What that means is, and I'm going to take these lines away for a second because I like to use the rectangle instead of the lines. So what that means is for this gap up, this candle closed right here. It opened right here because that is the anatomy of a candlestick. If you have a green candle, the lower body means that's where it opened, right? You have a green candle, the anatomy of this candle means this is where it closed. Does that make sense to everybody? Or do we have any questions there so far before I move on? Okay, perfect. Everybody's on track. Perfect, perfect, perfect. And I will find some more examples so we can work through them together, right? So far, close, check. So this candle, and let me use the replay for 1 second so I can get these other candles out of the way. Okay. So close, check. We went from this close. Open, check. We went to the open of this candle. Now this is our range. So from 423.25 to 433.28 is the range from close of Wednesday, November 1st to open on Thursday, November 2nd. Okay. It's 423.25 to 433.28. That is the range. That is your initial range. Now, what adjusted means is anytime price trades into that range, you subtract what it has taken out, and then you leave the remainder of the range, right? It's almost like a math problem. So this is pretty much, let's just call this a $10 move, right? From 423 to 433, that's a $10 gap. So that is what you've seen when Nvidia opened that morning. You've seen a $10 gap. Now price started selling off into the gap. That's where you have this wick. So since price start coming into your $10 gap, you're going to take that away. And this is the remainder of the gap, right? So we had a $10 gap, 423 to 433. Price came into that gap $5 from 433 to 428. And now you have a $5 gap that is left to be filled. So whenever you have a gap and price doesn't trade into it, that is how much of the gap that needs to be filled at some point in time. It does not have to do it today, doesn't have to do it tomorrow. It may not do it this month, this year, but at some point, it is possible that price could come back and return to fill that gap. Okay. Now, if you draw gaps, from wick to wick, that is your prerogative. I can't tell you. I mean, you pretty much have this close to the same range, but it works out on this candle. Some candles it doesn't work out like that. The reason I don't use the wick of this range is because yes, price traded up into that price during that day, but that's not where price closed at. So what price did yesterday, is that as significant when we're talking about gaps, where price traded up to at a certain point and then gap the next day? Is that really significant? No, it's more significant. Where did price close at and where did it open at? You're not wrong if you put it there, but I found that having it from the close to the open is a lot more not reliable, but it's more accurate from what I found. And I am, as you guys know, I'm a heavy fib trader, heavy strat trader. I am a heavy gap trader also. It is part of my strategy. So from what I found and how I was taught, having it at the close to the open and then adjusting it has been the most sound that I've seen. Okay. So I'm going to check the chat for a second, make sure we're not leaving anybody alone. Yes. And we will get into earnings. Okay. So yes, that's how so this would be the example of a full gap, right? And let me bring that down. This would be the example of the full gap because this opening range is completely outside of the previous day. Okay. It's completely outside. So the previous day's range that's the high, that's the low. This candle is completely out of that range. So that would be a full gap. An example of a partial gap would be, let's see if we can find one. See if we can find one. Yeah, this, where did I just see one? Not that one. Okay, this one. This one would be a partial gap right here. These two candles. So that is the high of that day. This is the low of that day. And then this is the gap from close to open. And then we adjust it. That's the gap. This was your initial gap right here. But as you can see, it opened within the previous day's range. So this would be your partial gap. Okay. I wouldn't give too much weight on partial or full gap. A gap is a gap. A gap is a gap. And it is likely that it will want to get filled. So what I want to do is I want to show you how this looks so you can see it the next day. You can see it in real time and you can understand a little more the reason I draw the gaps that way. Okay, so let's use the replay tool. I'm going to take this one away. Okay, so we know that price closed right here. So we're going to mark this as previous day's close. Okay. Now let's drop down. Let's drop down to a 5-minute. Maybe too far back in time. Okay, it's too far back in time. Let's find a different candle. We can use a more recent one. It's not a problem. We have plenty to choose from. Okay. This will be a good segue into both of my next lessons. So let's focus on these two candles right here. Okay. So price closed right here. And we have our previous day close, right? And now we will drop down to a smaller time frame. Okay. As far as price, this is the correct price. Oh shoot. This is the correct price. Sometimes when you go to smaller time frames, it may not show you like exactly. I don't know why TradingView does it. It even does it like if you mark something on a day and then you go to a weekly. I'm sure if you guys like drew a trend line or brought information on a smaller time frame or a larger time frame, and then you go to like a daily, it's a little off. TradingView does that, but this is the correct price for the previous day close. And if you want to check, if you want to just double check yourself, if we go back to the daily, we can hover over this candle and then you can see, where is it at? Sorry. If you hover over this candle, you can see the close says, why does it say that? 1 second. It says 167. Oh, it says 165.74. Yep, there we go. Okay. I must have been over the wrong candle. If you look up here, this is your OHLC, open, high, low, close values right here. So whenever you hover over a candle, it'll show you the open of that candle, the high of the day, the low of that candle, the close of that candle. Okay. So if you want to just make sure and double check yourself, if you look at the C, that stands for close, and you can see that it matches up with what we have right here. Okay. And you always want to turn your magnet on anytime you're looking for exact values. You always want to turn your magnet on over here. Okay. So this is our previous day close. We're going to go to a smaller time frame. Even if it looks weird, just know that that's the previous day close, and we double check. So we know that that's the previous day close. Okay. So this is 15:55. This is the last 5 minutes of this day. So let's check what happens. So we gap up. Okay. So when we gapped up right here. Okay. We gapped up at 474.80. So this was the open of that day right there. Okay. This is where we gapped up. Now we started pushing up, but do you see the range from 465.74 to 474.84? We had a $9 gap up. So anything that happens after this, we just start adjusting to shorten the range. Anytime price action comes between this range, we just adjust it until there's nothing left or until it leaves something and then it moves on in the opposite direction, right? So this was the original range right here, from here to here, okay? And I will even put open right here. Now, anytime price comes in between there, we are adjusting it. So price came right there. So we're going to adjust it. So let's see. So we have our open right here. That is the original range. Price came into our range right there. So we adjust it. Price came into our range again. So now this is what's left. So we adjust it. Okay. And it does not look like price returned back into this range for the remainder of the day, because as you can see, we're going in the opposite direction. Now, it is possible that it could come back down during that day, but so far it has not. We're at 220. Okay, so see, throughout the entire day, it came back into it, and now it's going back into that original opening range. So now we keep adjusting it, right? And that's something you want to be mindful of. If something gapped up that day, it may want to fill that gap that day. Some tickers are more prone to fill the gap that exact day than others. Some gap and they just kind of leave it there. Some like to gap and fill that gap before taking off into the original gapped direction. I've noticed that sometimes SPY likes to do that. It'll gap up that morning, it'll come, fill the gap, and then continue in the original gap up direction. So that's something to be mindful for. Let's see where we at. Okay, so we just keep adjusting it. This is what's left. What time is this? 2:40. And you see it's just filling that gap more and more. It's just chipping away at it slowly but surely. Okay, that's 5:15. And that is, we have one more candle. Okay, so that's the remainder of the day. This is the gap that it left behind. So we started off here. This was the original gap from previous day's close to open, right? And then we adjusted it along the way. Now, when it's an actual trading day, you don't have to just sit there and adjust it the entire day. You can keep the whole gap up and just know where the gap completes. But after that day is over, you definitely want to adjust it. Okay. And as you can see, we are pretty much spot on. That is the gap that is correct, that is left, and that is how I would have drew that gap when I'm drawing gap for analysis. I would have drawn it from close to open. This is a tricky one because technically this is the open, right? This is a red candle, so that means it opened here. And let me get back my text so we can keep it close to us. So close to open, and then I adjust anytime price comes within that range, and price came all the way here before ending the day. Now, if the next day it comes below this, then that gap is done and you erase it and you keep going about your day. Um, and let's see what happens the next day. So it gaps up again. It gives you another gap from the close to the open, and then it's sold off a little bit before going back into the intended direction, which was up. Okay. Does that make sense to everybody so far? Check the chat. Okay. Is it the same as a fair value gap? No, it's not the same as a fair value gap. Um, I don't really want to confuse. Okay, no, I'll explain. It's not the same as a fair value gap. With a fair value gap, let me see. I like you can find them really well on the daily. With a fair value gap is you have displacement with one candle. So you have an extremely um explosive candle where the high of the candle before it and the low of the candle after it, they don't intersect. So you have one candle that just bullies through this entire range. And price likes to come back through a fair value gap too. But this isn't an ICT class. I do want to just show you the difference, but no, it is not the same thing. No. I'm still learning ICT myself, so I'm not I can't even teach you guys really something I don't 100% understand. But yes, so that's where we are in gaps. Now, gaps are an imbalance in price, right? Pretty much what a gap is it's unfulfilled orders. Orders that were not able to be fulfilled, right? So let's say like this day right here, right? You had a limit order. And let's just throw options away for a second. Let's just look at stocks to keep it simple. Let's say you had a limit order for 424, right? And you say, okay, I set my limit order. When the market opens tomorrow, I want to buy at 424, right? Price gaps up to 433. So that means your order did not get filled, correct? That is a unfulfilled order that's sitting there. Now, us as option traders, we probably not leaving the order to just sit there and whenever it hits, it get filled, whatever. But as stock traders, when you're setting the limit order, that might be the price that is what you want to pay for that stock, and anything above that is out of your price range. You don't want to pay for that. Now, that leaves an influx of orders that are just sitting there, correct? So gaps can serve like a magnet that price will want to at some point return to them, especially when they're close to them, and fill those orders that were previously set. Okay. Um, I want you to think of it like a bridge, right? And I used this example the other day and I really liked it. Think of it like a bridge for a river, right? You have a river that's in the middle of your town, and then you have like a walkway bridge. And in the middle of that bridge, it collapses, right? There's no way for you to just walk across it. Now, there are some people who are like, I got to get to work. I got stuff to do. I'm just going to jump the bridge, right? They might make it through. So think about them as your market orders, right? They're like, I don't care like about this gap in the bridge. I'll take my chance. I'm going to just jump over. I'm going to just get a running start and jump over the bridge. Those are your market orders. Those are the people who are pretty much chasing the price action. Now, limit orders will be the people who are just standing there waiting for maintenance to come and repair this bridge, right? And as the bridge starts to get repaired more and more, you might have people that might start, they might they might be like, hey, that gap is close enough for me to jump now, so I might jump before it's finished too. And then you're gonna have the people who just waited for the bridge to completely be finished, being repaired for them to walk across, right? So once that bridge is repaired, then those people can walk through. Though now those orders can be filled also, right? That's how I like to look at a gap. It's orders that's just sitting there waiting to be filled. Um, okay, let's take this away. Now, gaps can also be used as like a support and resistance. I do notice sometimes when you see a gap, I know SPY just did it. When you see a gap, it'll reject the gap sometimes. It'll come back down a little bit and then it'll come and fill it. So you can use gaps as support and resistance. But when price gets close to those gaps, it is very likely, very, very likely that it's not going to reject the gap. It's going to fill it before reversing in the opposite direction because it's right there. Gaps will be more like a magnet. Price action will be attracted to those gaps. Okay. So let's do some gaps together. This is where NVIDIA is currently, right? So as we can see, to the naked eye, this may not look like a gap to somebody, right? If they're used to drawing their gaps like this, they might overlook this gap, right? If they're only trained to look at gaps like that, they're gonna overlook this, which means they're gonna miss out on information. But the true information is the gap is actually from here, from close to open, adjusted. Okay. And while you guys are drawing gaps, because you're going to practice this, I'm going to give you plenty of homework. You will get gaps down, and I want to see them on your charts. I want them to be part of your analysis. When you start drawing gaps, until you can completely get them down and you can see them literally with your eyes closed, you can look at a chart and notice every gap without even going to it. I want you to say close, open, adjusted while you're doing it. So I want you to say close, open, adjust it. And I want you to do it exactly like that. Go from the close to the open and then adjust it. Okay. If you do that, I promise you, you will get gaps fairly quickly. You'll get them down and you'll be a professional in a couple weeks. Probably not even that long. You'll get it down very quickly. So we're going to do them together. So we're going to go from close, open, adjust it. Okay. And those are our gaps for this range right here. So we have a gap fill here, and we have a gap fill here. If you are very new and you're kind of wondering how I got my rectangle like this, it's literally just the rectangle tool. Okay, it's just the rectangle tool, and I have a template for it. But you can customize your settings however you would like. You see I have the purple style. I have a background for it. You could take your background off if you want. I have it extended right, because if you extend it right, then you know where price has to come back and visit at some point in the future. There's no point of extending it left, because if it's left, price already completed that gap. You only care about what's happening in the future, not the past. Okay. Or what would happen in the future, not the past. Okay. Now, some people you'll see, there is some people who are very good at gaps in our group. I see they'll draw a rectangle and then they'll also draw a horizontal ray like this to highlight the gap. There's nothing wrong with that. A lot of times the reason they do that is because they want to see it better, or they want the values of the gap to be on the scales, the price scales on the right. So once you draw that horizontal ray right there, you can see the price values very easily, right? But you don't have to do that though. You can take these away if you would like. And if you want to see the values of the gap, all you have to do is just click it and it does the exact same thing. Okay. And it's easier to adjust when you don't have that ray on it. If you have the ray, you have to move this and the ray, but this you could only have to, you only have to move the rectangle. Okay. So let's draw some gaps on NVIDIA together. And as we draw them together, if one of them don't make sense, come off the mic and tell me to go back. Like, how did you see that? What made you draw the gap there? This is the interactive part. So if you don't see it, let me know so I don't move on. Okay. So first things first is what I want to do when I'm drawing a lot of gaps, and I will show you the reason why. Get out of replay mode. I want to mark out the high and the low. I want to mark out the high first. And the reason being, I know if price in the past, if price is below this, I don't care about it. The reason I don't care about it is because I know price had to fill that gap at some point in time if it's up here now. Okay. And that'll make sense in a second. So the first thing I do is I'll mark out the high of where I'm at. And this will save me a lot of time. So we have that gap, we have this gap. And do we have a gap here? Yes, we do. It's a small one, but it's still a gap, and I'm still going to mark it. Right? It was open, close, adjusted. And that is the small little gap that it left. Still a gap. Okay. You know when a gap is filled if this wick was below the open. Now, if we had a wick below the open, then that gap would have been filled and it wouldn't even caught my attention. Okay. Like this one. This is the close. This candle is below the open. I mean, it's below the close. I'm sorry. I know I said open here. It's below the close. So whenever the next candle is below the close for a green candle or above the close for a red candle, that there is no gap there. So here, no gap. This is the open. This candle has come below that open. So no gap there. Here we have a gap. Close, open, adjusted. This is where price came down into. Okay. And if you're still not understanding that concept, think of you started with 1, it gaps up to 10, and then it subtracts 5. You're left with 5. Or let's say you started with 0, it gaps up to 10, you subtract 5, you're left with 5. That is pretty much the concept. 0, 10, 5, left with 5. That's pretty much the concept. And I can give you the exact values. Actually, we open at 435.06 and then we gapped up to 440. So we started at 0, went to 5, price went down 3, we're left with 2. Okay. We have a gap here, close, open, adjusted. We also have a gap here, close, open, adjusted. This is a very, very, very bullish day. It barely sold off in the morning and it just completely ran for the rest of the day. Okay. It has virtually no wick at the bottom. So that thing was bought up that entire day. Okay. So now what I want to do, since this is the low, I want to put a horizontal line there. So now what I've done is I created a range, right? If there is a gap here, right? If we have a gap here, it's within this range. So that means I know at some point in time, price filled this gap, right? And I can draw it out for you. This is the close. This is the open. That's the adjusted. If you look to the right, this is the close. If you look to the right, it got filled, right? This gap right here got filled. So I don't care about it. Anything within this range had to get filled at some point in time because I know price action is between this range in the future. So if it gaps back here, I'm not going to draw that gap because I know it got filled. It had to, because this is the range. This is the new range that it made, right? So now what I can do is I can just keep moving my range up, and this allows me to draw gaps very fast. So if I see a gap on the high side, if I see it below this line right here, I don't care about it because I know it got filled at some point. If I see it above it, then I care about it, and then I move the line up. So here, no gap. And if it's close and you can't tell by the wick right here, just look at the close of this. So the close of this was 485.84. And then the high of this candle was 485.95. So as you can see, this went higher than the close of this. That's not a gap. No gap there, no gap there, no gap there. Okay. Now I'm going to move this up to this high. And now I don't care about anything, any price if it's not above there. And this allows me to just scan for gaps very, very quickly. I don't care about any price action in between this range. Now we have price below this range. Now, can anybody answer in the chat? Do I care about this gap right here? This is a gap right here. Close, open, adjusted. This is a gap. Do I care about this gap right here? No. Why don't I care about that gap right there? It's within the range. Exactly. And if for all the people who are visual, if you need to see it, just look to the right. Boom. It got filled right there. Right. So that's why I do that. And that's how I'm able to draw gaps very quickly. Now, if you want to just draw them for, if you say like, hey, the price action is right here, this is all I care about, cool, you can do that, but you may be doing yourself a disservice because there may be a gap from 2018 that you're not seeing. So when you're wondering where price is going, there may be a gap that was from 6 years ago that you didn't even catch, right? If you're in the Discord, you've heard J Money talk about that 438 area. He's been talking about it for weeks, right? It had a gap there that needed to be filled. And I'm not sure when that gap was made, and that's for SPY. I'm not sure when that was recreated. We have to look at it, but I know it was not very recent. It was probably a few months ago, and he knew that price was targeting that gap. So you can take the choice to just look at whatever is where price action is close to, but you may be doing yourself a disservice. And I've created a way to do it very quickly. I wasn't taught to do it to figure out the range part. I literally just drew gaps so much I figured it out. Like, hey, every time I draw a gap over here, it gets filled on the right. So maybe if I just draw within the range, then I can do it more quickly. And if you draw, the more gaps you draw, if you find a ticker that you're very intimate with, I know there's a young lady who's very intimate with AMD, right? It would serve her well to draw all the gaps that AMD ever created, because a gap may come back to be filled 7 years later, right? And you never have to draw it again. It's already on your chart. And I'm going to show you how to organize these gaps and hide them all at the same time too, right? Okay, so boom, y'all got it right. It's within the range. It is a gap, but it's within the range. So we don't care about it. So we're just going to keep moving this down because the range is expanding. Okay, so now we do have a gap. Well, we'll move it down to right here. And I'll show you another benefit of this line too once we come across it. So we do have a gap right here. Close, open, adjusted. Okay. And then we're going to move this line down. We have another gap, close, open. Oh, I'm sorry. You really shouldn't move the line down until you get like a swing point. I forgot to mention that part, but so close, open, adjusted. Very small gap, very small. It's a 30-cent gap, but it's still a gap, and it may get respected at some point in time. Okay, so we're gonna move this down. We don't care about anything here. There could not be a gap from this one to this one, so we're just gonna automatically move this down to that swing point. Okay. So here is the benefit of using these horizontal lines. You can see it well here, and we'll find it on another ticker so you can really see the benefit. So let's say we only seen price from like right here. and we seen a gap up. We want to know, instead of scrolling all the way to the right, we can just see, hey, we know that this was the lowest point of price action over at that point. So I can just draw the gap from there to there. And I'll show you an example of that. So here we are to the infamous NVIDIA gap up, right? So this is the day that NVIDIA gapped up. It closed at 305 that afternoon, 305.38, and it opened at 385.23 that day, right? It sold off to 366.35. This is a very, very large gap, right? This is a pretty much a $60 gap, $61 gap. When you have a gap this large, what it is unlikely that it will get filled in one swoop. It'll usually take time. They'll usually chop away at it, pretty slowly. So when you have a large gap such as this one, what you want to do is you want to mark 50% of the gap. So you could put your fib on it, and you want to mark 50% of that gap. Okay. And I have, 50% of that gap. And what may happen is price may come back into this gap, and it may reject 50% before reversing back into the opposite direction, leaving another 50% to be filled at a later time. Okay. It may look like that it's going to fill the entire gap at one time, but it may just fill 50% of that gap before taking off. And maybe it comes back and fill it in a few years or whatever the case may be. So when you have a large range, a very large gap up, you want to mark 50% of that gap. Now, there's not really a standard price like $30, $40, of how much before you mark that 50%. But you'll know it when you see it, like, right? That was pretty obvious versus all of the other gaps that we've seen in price action. That was pretty obvious. So when you see a drastic, exaggerated gap like that, then you want to mark 50%. Okay. Now, before I move on, some of these candles did have gap ups that morning. So let's find an example. Okay, so like this one, this is an example. So price closed right here, it opened right here, right? But they immediately in that morning or whenever at some point of that day, they started buying it up. Okay. They bought that gap up before reversing and then taking it back down in the intended direction. And that's why sometimes I believe that gaps can be created to or gap ups or down can happen to create liquidity, right? Because they knew they wanted to take price down here, but they sold it off. It got bought up first. It filled that gap, and then they continued to sell it off for the rest of the day. Now, sometimes you'll have a gap up, it'll sell off, fill the gap, and it'll continue selling off. That means it gapped up for whatever reason. It was pretty much like a false gap up. It was a gap up that was based off of emotions and not fundamentals. Okay. So that's something to note. So yes, that is NVIDIA. We have that big ass gap right there. We want to put 50% on it. And then of course we will move our line down. So that means we don't care about this gap. We don't care about this gap. It's below that range. Now we have another gap right here. I'm sorry, it's above that range. We have another gap right here that's below the range. So we're going to go close, open, adjusted. Okay. No gap here, no gap here. Move it down. Don't care about any of these candles. We have another gap. These are the ones that's going to trip you up the most. When you guys go do your homework on your own time, these candles are going to trip you up the most because they don't look like they gapped up. But you have to remember that this closed right there and it opened right there. And then it adjusted, it came back into that range right there. So this is a gap. So you're probably gonna have to watch this a few times to really get down that concept. That tripped me up crazy when I was like, I just was not seeing it when I was learning about gaps. I was literally buying one-on-ones for the person who taught me to like why, like explain to me how that's a gap. But it makes sense, right? We didn't close up here. Yes, price went there that day. Price went up to there, but that's not where we closed at. So I can't value something um up here when that's not where it closed, right? That's like that's like me saying like, yo, I run a convenience store, right? And 2 months ago, we so we were in profits 120%, but today we're down we're down in revenue 60%. Do I care about what happened 22 months ago? No, I'm down 60% today. So that's kind of how I look at it. Like, nah, this is where we close. This is yeah, we was up there before, but we're not gonna talk about what we used to be in high school, right? This is where we at now, and this is where we at tomorrow, right? So this is a gap. Close, open, adjust it. Move that thing down to that pivot. Don't care about that gap because obviously it got filled. And boom, see now y'all I know y'all can see them now that y'all on here with me. So this is a good example of this is your original gap. Close, open, adjust it, but then the next candle adjusted it even more. So you have to take some off because of that next candle, right? So you had an original gap for this candle. The next candle came down into that gap also. So you take some off of that candle too, and this is the gap that you are left with. Is this making sense to everybody so far? Any questions there? Oh, I'm glad we rolling, man. I'm glad. I'm glad this is not really tripping y'all up. And now, once we get off here, don't be surprised if some of the stuff I said kind of goes out the window. You may have to watch this a few times, um, because it takes a while for you to train your eye to see them. Like once you see them, you can't unsee it though. I promise you. Like once you practice this, you keep practicing, you cannot unsee it. You'll be able to see a gap, no problem. You'll be able to see a gap if it's valid still or not. Like you'll look at like, oh, that's a gap, but it's not valid because price went through it over here. You'll be able to see it very easily. Um, but this is definitely something you have to practice um for you to get it, right? Let's do two more. So we got gap, close, open, adjust it, and then that next day it went down some more, so we adjusted some more. That's the gap. Okay. Okay, perfect. This is a perfect segue. Perfect segue, perfect segue. So we go move this down. Don't forget to trail that, right? So if we are looking at this one, right? We obviously know it gapped up. Um, Sometimes that previous low can be very, very far away. Like it can be very far away where you don't have the time to scroll all the way over there. So that's why using this line gives you an accurate of the previous low that you're going to use, right? Even if you keep having to go back in time, you might have to be like, damn, is that the low, or is that did price fill that gap before? You won't know. But if you put this line on it and you snap it to it with the magnet, you know for a fact that is the last low before that gap. And you don't have to guess. Okay. So I know I don't have to, if I'm going to adjust, I don't have to go, this is the close of that day. This was obviously the open. I don't have to go like, oh, okay, adjust it, adjust it, adjust it, adjust. No, I know this is the last low. So I can go from close and I can just automatically go here because I know that's the last low. I know price went down into the gap that much. Okay. Um, let's look at meta real quick um before I show you guys how to organize them. Okay. See something. 160. Okay. Yeah, I like this one. Let's use this one. So I would mark this as the low, right? Let's say I had already been doing my gaps all the way to this point, and this is the low. And I said, okay, I don't care about this price action because that is the most low that I've encountered while scrolling, right? So I can just literally scroll past all of that price action because I know if it's not below this range, then I don't care about it. It got filled at some point, right? Now, let's say I didn't have this line here, right? Let's say I was just winging it and I was like, okay, here's a gap. Here's a gap. Close, open, adjust it, boom, boom, right? I would still be going up, drawing gaps. I would still be going up, drawing gaps, only to find out at some point, when was this? What date was this? This is January 2017, only to find out, oh, look at that. The next year, pretty much 2 years later, because that was January 2017, November 2018 filled that gap, right? And that trend that I just showed you would continue. I would literally just keep going up doing that, only to find out that it got filled at some point. So that horizontal line saves you from doing that, right? We know that this is the low. There's no, on the right of this, there's no price action that's lower than this. So we know anything to the left of this, we don't worry about it. And this is very key to have your magnet on. You have to have your magnet on. You have to be precise with this or it can mess up everything. That is the low of the candle. We can check by the low right here. Hover over it, 123.02, 123.02. Boom. So now we don't care about nothing that's higher than that level. And then once we get below that level, now we can start looking for gaps, right? We found one. We found a swing point. Just move it down there. Move it down to that swing point. And then we don't have to look at any of this. And now I can look very quickly. Okay, that's not a gap. That's not a gap. It can't possibly be anything in between there. That's not a gap. Can't possibly be anything between there. Move it down to there. And now I don't care about anything between that. And once we start getting below, then I'll start paying attention. Okay. That's literally what you're doing. How many gaps that you draw is completely up to you. I know somebody's gonna ask, like, do you care about drawing gaps from like 2016 or whatever? It's completely up to you. If it's a common ticker, I may or may like if it's just a regular ticker, may draw it, may not draw it that far back. Like if I know I'm only gonna play it a couple times, I may not draw it that far back. I may just look like, are there any gaps near where price action is right now? If it's a ticker that I'm gonna always look at, I'm gonna draw every single gap that it ever created in its entire history of being on TradingView. I'm just being honest. I'm going to do that because I know if I draw it once, I don't have to continue drawing it, right? Um, I can have every gap that it ever had, and then I can just continue to adjust them as they get filled. Look, I have every gap that SPY ever created, all the way down to probably $0. And every time it makes a new gap, I just adjust it. Every time it fills a gap, I just delete it. It may seem obsessive, but I'm able to do my analysis fairly quickly, right? Like if we kept continuing up, I would say, hey, we have a gap up here that SPY may try to fill at 450, right? We just we just filled a gap this week. This is the gap that J Money saw right here. This is the gap, right? And as you can see, we continue to play around with it. We touched it this day, came out of it, went up into it that day, right? And then we were left with this as a gap. So as we started gapping up on SPY, we knew like, hey, there's a gap up there. It may be trying to fill it, right? And this is a perfect example how we used it as resistance a little bit. This is the adjusted gap that we were left with. It approached it. And keep in mind, this approached it all the way from 409, I believe. Yes, from 409 all the way to that previous gap that was made in September. Used it as resistance, used it as resistance again, and then finally blew through it, completing the entire gap. So it chipped away at it for 1 day, 2 day, just made the gap smaller before taking off, blowing through it, and completely filling that gap. And then once that gap is completed, you just delete it. Once it's completed, delete it. It doesn't serve you anymore. Okay. Now you want to find that gaps on the daily time frame. Okay. It's possible that you may see them on the weekly, but that won't tell you too much information. You find gaps on the daily time frame. What did it do from the day before to today? That is what you care about. Okay. Now, what I'm going to show you after, and this will be the final thing. After you've drawn all the gaps that you want to draw, right? It may be too much to be seeing all of this on your screen, right? That may be very annoying. So what you can do is, let me delete these horizontal lines. What you can do is use your object tree. And with your object tree, it allows you to categorize things and put them in groups and do the same thing. You can control them as a group instead of individually. So what you do is, if I'm looking for the rectangles, I'm going to click the rectangle. I'm going to, and I'm sorry, first the object tree is going to be this little stack of papers right here, right? I hope everybody can see that. It will be this stack of papers right here. My trading view just updated. So my object tree was down here. So yours may still be down here. You have this little help question mark. It was right above that. Yours may still be down there, but mine is up here right now. It's this stack of papers. It looks like a baseball diamond right there. So you click the object that you want to group, and then you click this folder with the plus sign right here. You want to click that, and it creates a group. Now you can name this group whatever you want. I'll name mine gaps. Okay. Right. And now what you do, you want to unclick that one. Now, I don't know if you're on a Mac or what you're on, but if you're on a Mac, you just click Command, and then you can click multiple, and then you can put them all in the same folder. Now you have to, once you click multiple, you have to release Command to drag them, and then you just drag them in that folder, right? And now they're all grouped together within this folder. So now I can lock them all at the same time. I can hide them all at the same time. I can collapse this folder so that's all I see, right? And I can just bring them on at the same exact time every time. And then I can also add templates to all of them at the same exact time. So I have a template for gaps. Whenever it wants to show up for me. Second. Oh, you know what? I have I accidentally put fibs in here by accident. There we go. Okay, now let's try it. Template. I have my gap fill. Okay. And now all of these will say gap fill. Let me unlock it so you can see it. Now all of these will say gap fill. Now, the reason you may not see some is because the rectangle is too small. So you may just want to like drag it out. And let me try that one more time. And they all say gap fill now. But some of them you have to drag the rectangle out if you want it to do that, right? So if I want to put any of my templates on it, if I want this to be a fair value gap, now they're all fair value gaps. If I want it to be a range, now they're all ranges. You see, any template that I add to it, it'll do it to all of them. If I want it to be outside range, like anything I want it to be, it'll do it to all of them. Okay. Very, very, very powerful tool. And I want to lock them all at the same time. I can lock it and then collapse that folder, and that's all I'll see. And whenever I don't want to look at it while I'm trading or whatever the case may be, I just hide them and I go about my day. Um, okay, I'm reading through the comments now. Yeah, everybody's pretty much saying I'm gonna have to watch this again. Trust me, I know. I've been there. This was one of the concepts I had to watch a lot of times because it's not that it's not only that I wasn't getting it, it was just a lot. Um, and this is probably even longer than the video that I learned from, just because I've learned things along the way that I believe is helpful also, right? A lot of people aren't teaching about the object tree. They're not teaching about the horizontal line, how to quickly do your gaps and what you want to be looking for. But those are all, helpful things that once you start seeing gaps, it is definitely a tool you want in your toolbox, 1,000%. You will see price get attracted to gaps like they do liquidity. You'll just see it. You'll see it. You'll even change how you view gap ups in the morning. Sometimes you see something gap up in the morning and then you chase it, right? You're like, oh, you don't want to miss that move. And then it sells off only to complete the gap and then continue buying off. So very important to see. So I've taught you guys how to identify a gap, how to draw a gap, what a gap is. I will also tell you that there is an indicator for gaps. If there's something I can do myself, I really don't like indicators, but there is a gap indicator. It's called gaps. Yes, it's called gaps. But they do not draw them necessarily the way I draw them. They usually draw them from wick to wick, and they don't fill the gaps after they are filled, right? Like that is a gap, but that got filled. So it doesn't, that's why I don't really like the indicator and I don't like relying on the indicator. But you can see it's pretty similar to what I've shown you. Now, if you want to just go off of the indicator, I won't fault you for that. But as long as you know the correct way how to do it, that's not an issue either. I know some of y'all probably gonna be mad at me, like, damn, I just sat here for an hour, listen to you teach me how to draw in gaps just for it to be an indicator. Yeah, there is, but I am not one to rely on indicators at all. If I can do it myself, I will. And like I said, the indicator does it a little differently. It goes from wick to wick, and it does not fill those previous gaps. It just leaves them on there pretty much. And I don't know the algorithm for it, honestly, because it has this gap right here that was filled. It still has that on there, but it doesn't have this one. So it's like I don't know what I don't know what they're doing. Okay. Um, let me look through my notes to make sure there's nothing I am forgetting. Um, we talked about partial gapping, we talked about full gapping, we talked about what a gap is. We've talked about a gap fill, when that gap is created and price fills it. If price fills that gap fairly quickly and it wasn't able to sustain that gap, so let's say it gapped down, right, at a discounted price and they immediately bought it up, then it was probably gapped down for the wrong reasons. It was gapped down off of emotions. not a fundamental or a sound fundamental standpoint. Gaps usually occur due to news releases, um, earnings, some type of catalyst, economic change, things of that nature. And I added my, it's like a little asterisk next to it to create liquidity. Like I said, there's nothing in the books that says that it's to create liquidity, but I don't think they would put that in the books. That's just something I observed. If something gaps down and you buy it back up, to me, that means you created liquidity. You stopped out the ones that tried to short it and you took their money and went the other way. That is the definition of creating liquidity. So I'm going to leave that with you guys also. But yeah, that will conclude this class. Is there any questions that you guys have that you want to see? Anything you want me to go over before I leave you guys? Anybody? This is a safe place. Okay. I'm assuming a lot of y'all are banking on that you're gonna have to watch this a few times. Um, Charles, where's this video going to be best? It's going to be posted in the indication in the education tab. Please give me a little while because these videos take a long time to edit and then upload. So give me to at least tomorrow. It takes a while. Um, how do you do the templates? I can go over that. Yes. So any tool that you have, like let's use this for example, that line. If you right click it, or if you're on a Mac, I think it's command click, or is it control and click it. You go to you can set you all right. So let me show you how to create a template, right? So let's use this line. Let's say I want this to be a yellow line and I wanted to say good morning in pink, right? What you can do is you can go to save. I mean, you can go to template and you go to the top to save as, and then you name whatever you want that template to be. Let's say I wanted to say good, and then I click save, and I click OK. So now I have just created a template. So even if this line is blue, right, or even if it's red, if I right click it, I go to template, then I click good, it'll turn into that. Okay. Now, templates are only used for the tool you associate them with. So if I have a template for a horizontal array, or horizontal line, an extended line, they're going to have different templates because they are different tools. So this template is going to have different settings than this one and this one. Okay. So they have to match up with the tool you are using. Hope that answers your question. Okay, perfect, perfect, perfect. Yeah, so I appreciate you guys so much for coming out. Um, I this was a big class today, so I really appreciate you guys taking the time out to listen to me talk for an hour. And you're doing something that help yourself and benefit yourself so you can be a better trader as we continue to elevate in this community. So I really appreciate you guys also. Um, I will have this posted for you as soon as possible. Once again, thank you guys for coming out, and I will see you guys later. Bye, y'all.